Okay, everyone, I hope everybody has had a great year 2023. It's hard to imagine that we are in December and coming up on the Christmas season and the end of the year. So welcome to today's webinar, and we're going to be talking about sweet spots and blind spots when it comes to our money. And we all have unique experiences that impact how we think and feel about money. And that drives our behaviors in decision making, whether it be good or bad. If you're already familiar with value cards or risk tolerance profiles, today we're going to take it a step further than that, and we're going to look at our behaviors, what we like to call the sweet spots and the blind spots. And what we hope to achieve here is helping people achieve financial goals, better communication with your spouse, significant other, your financial advisor, etc. The goal of tonight is why is it important to understand your sweet spots and blind spots when it comes to money? How to gain this awareness and what to do with the information so that we can have better decisions moving forward. Why should we care about this? Well, research shows that performance is as much or maybe more impacted by the decisions that we make than by crunching the numbers on investments. And think about this for a minute now. Performance of a professional athlete is more impacted by their decisions when they're on the playing field than their skill and talent combined. The same thing is true about our money and making financial decisions. I have seen this firsthand plenty of times. And a person who anchors on a specific price point for an asset or an investment, and maybe it doesn't matter that they can diversify their investments and make more money elsewhere, they have this blind spot that they're not going to sell that asset until it gets to that certain price point. This would be called an emotional type of bias there. And these emotional decisions can lead to irrational decisions and impact the overall portfolio performance. Studies show that emotional decision-making can reduce an investment performance by 1.17 to 4.33% per year. And over a longer time horizon, that can really add up. Further evidence shows that even the most skilled people who are confident in their financial acumen still need support from time to time. And what's even more so, the majority of investors think about finances, it often makes them anxious. And a significant portion of investors overall get stressed out. And yes, money can be stressful. It's a second leading cause of divorce, but it just doesn't have to be. Finally, more investors, 29% of them, think that their investments will outperform the market versus only 4% of investors think that their assets will underperform the market. So in essence, we are hardwired to believe that our assets are going to overperform, and that can create a blind spot as well. So let's define blind spots and sweet spots, starting with the sweet spots. We can define this in multiple ways, but it's natural tendencies, it's preferences, strengths, awareness of biases that impact financial decisions. It's understanding your thinking and your feeling and your preferences when it comes to making those decisions. Blind spots can also be defined in many different ways. These are the stress behaviors when we're making decisions, the underlying feelers, behavioral biases, irrational financial decisions, may be lacking awareness. We're falling back on natural tendencies and communication skills. So the key point I want to bring out is we want to maximize our sweet spots and we want to minimize our blind spots and avoid being part of these types of statistics so we can make it easier on ourselves to achieve our financial goals, have a happier and healthier financial life, and have more informed financial conversations. So how do we get the insight into our sweet spots and blind spots? We use a survey called Financial Virtues, and this is an easy to use tool to help us identify behaviors, strengths, fears, preferences, all needed to support your financial goals. It is a very quick 5-minute survey. It's super fast. It's based upon character science. So if anyone out there has ever done a DISC survey or Myers-Briggs, and there's several of them out there that are geared toward personality profiling for, let's say, jobs and other occupations, this is designed for our personal biases around and preferences around financial decisions. So it's character science. There's no wrong or right answer. There's over 19,000 variations of this. So it's really unique to you, and you get the results immediately. If you've already done a survey, I'm happy to go over it with you. If you have not one, we can complete that survey today, and it'll give you the insight and knowledge that you're looking for. I will provide my email at the end of this webinar, and you can email me and I'll get right back to you with a survey. I've also put the survey link in the chat box of the webinar, so hopefully you can click on that there. On a big picture though, let's kind of walk through the financial virtues at a high level and discuss this. And the 4 personas that financial virtues use are bulls, the blue, yellow, orange, and purple bulls. You can see those on the screen there. And the characteristics of these is wisdom, which is based on one's ability to look at the big picture, the macro view. And courage means having a strong desire to take action and to persevere and doing the right thing, even when there might be a lot to lose or it's a tough decision to make. Knowledge, based on one's need for detail and information. Humanity really spotlights and anchors on people and tends to express empathy and the desire to understand how best to help. The Financial Virtue Survey also reveals to us 18 of the most common behavioral biases that impact investment performance. And these biases are what we call the blind spots. And they do prevent us from reaching our goals. Things like anchoring, which I mentioned earlier, but other ones are loss aversion or endowment, herding, recency, overconfidence, just to name a few. So when you complete a survey, there is a web graph that appears over this diamond shape. And let's cover that a little bit. There are 2 lines to this. There is the thinking line, and the thinking line consists of preferences of ideas and wisdom over information and knowledge. There's a second line, the feeling line, which consists of preferences of compassion and humanity versus passion or action and courage. The four personas are made up of virtues on these two lines, and where our survey falls and our tendencies determines upon which quadrant we fall into. So it's an easy to understand survey. It classifies us as one of the four colors and helps us make decisions. All four of the personas, all follower of the financial virtues, these are good. There's not one virtue that's better than another. And we really all have all four of these in our personality, in our characteristics. However, we do express them differently, and we have tendencies and biases to express one quadrant more than the others, especially when it comes to being under stress. And that is a big point of where our blind spots come in. So I'm going to look at each one of the bull personas at a high level, but blue bulls tend to have virtues of wisdom and humanity. They like collaboration. They don't like excessive detail or being pushed or micromanaged. They like to ask the question, who? They don't like to feel overwhelmed, and they might have a bias of herding, wanting to kind of go with the crowd. The yellow bull, their virtues are wisdom and courage. These are fast-paced conversationalists. They like to move toward action, positive views that create movement and momentum, but they don't like critics and skeptics. They don't like overanalyzing, and they don't like slow progress. They like to get on the ball and get done with things. They ask the question, why a lot? They can be a little impulsive, and their bias tends to be self-control. They think they can control just about everything. The orange bull, their virtues are knowledge and courage. And they like process and structure. They like mastering new skills. They don't like excessive ideas and indecisiveness. They ask the question, how, a lot. They, under stress, they might micromanage, and they want a lot of critical detail. And then their bias might be illusion of control, thinking that I can control all of this. And we all know folks like that, right? The last bull is a purple bull. My survey revealed that I'm a purple bull, and these traits sound a lot like me. Doesn't matter what color bull you are, everyone that I have given the survey to does say that they believe that these traits do sound like them. And the traits go deeper than this after the survey is completed. But a high level for the purple bulls, the virtues are knowledge and humanity. We like perspective, supportive environments, critical thinking. We don't like rushing and rudeness and indifference toward our contributions. We ask the question, what, a lot. Under stress, we can be a little resistant and maybe skeptical. And our bias tends to be loss aversion. So like I said, all of these financial virtues are good. One is not better than another. And we have a combination of all these personas in each one of us. But like I said earlier, we do tend to, under expressions of great excitement or stress, we tend to express one quadrant more than the other. So it's great to understand this information and understand our sweet spots and those blind spots. So the reports are very uniquely tailored to you and your personality. And even if you have multiple blue bulls in the same room, they're not all going to be exactly alike. I mean, there's a lot of personal experience and thoughts and feelings that go into this. So what do we do with this information? Well, we all have biases and tendencies. I got them too. I probably have more than my fair share. We create awareness around those, and we want to slow down our thinking and address them as we are making decisions to make sure that we're in our sweet spot and not the blind spot. And it's also it's important to understand the bias at play in certain situations. Let me give an example. There are cognitive and emotional biases. Familiarity is a cognitive bias. And if somebody grew up and their family always drove a certain type of vehicle, they might be very inclined to buy a stock in an auto company of that type. Now, that might be a good decision and it might be a bad decision, but there's a cognitive bias for that familiarity. And in those situations, we act as a coach to provide objective information to help you overcome that thinking if it's not necessarily a good decision. Of course, this information also needs to be presented in a way with your line of thinking and feeling and communication style. An emotional bias might be endowment. That's one of the emotional biases. An example, somebody inherits a house and or any other asset though. And let's say the taxes and maintenance on this house puts a strain on their financial lives, but they refuse to sell it because it's been in the family. And I get it. It's a hard decision to make, right? But with emotional biases like endowment, more information just doesn't help, right? It doesn't even compute because it's emotional. And more information usually backfires and people tend to dig their heels in and become more entrenched in the situation. So in these cases, we can act as an accountability partner and ask thoughtful and insightful questions, act as a sounding board. Is this really a good decision? So we use the information, the financial virtues reports, to tailor communication specifically to you. And it can even be among people in the same household. One person may just want all the details and they want to get really granular and detailed in there. The other person says, just give me the big picture, pretend I'm an airplane flying 30,000 feet over the ground. That's all I want to know. So we'll present the information according to each person's preferences. Finally, our unique preferences create interaction patterns. And this information helps us understand all the collective sweet spots and blind spots, because when you have multiple people working together on a financial plan, it's good to understand that for a communication standpoint. So to wrap up, I thank you very much for your time today. If you have pre-registered for this webinar, we will email a link to you to complete your survey. If you didn't register, email us and we will send out a survey to you shortly. And I welcome the opportunity to just continue the discussion so we can create that personalized plan and approach for you. My contact information is on the screen, and I look forward to speaking with you in the future and helping you understand how our behavior impacts our finances. The next webinar will be on January 16th. And the subject of this one will be business owner succession planning. So be on the lookout for that invite in your email or on social media. And thank you very much for your time.